to our value stock strategist, Tracey Ryniec, to come up with interesting value stock picks. Well, this time is no exception either. She joins me here. Boy, you do have a couple of
I do have some interesting
wild ones here. The first one, not so out of the ordinary, Trinity Industries. They make and lease rail cars, right, and barges.
Yeah. They've been interesting. I've talked about them several times over the last couple of years, and it was like 2 or 3 years ago, the rail car industry, during the recession, they got hit hard. Nobody needed to buy or lease rail cars, and so they didn't make any. But then demand obviously picked up, and now there's this huge backlog. And the orders keep coming in, but everybody, all the analysts assumed, oh, you're going to reach a point where the demand isn't going to be as strong. And it was supposed to be like last year, the year before. And so far, it's not happening. They keep having, big backlog. They keep beating the estimate. They keep seeing, good momentum going forward. They also have a barge segment and a couple other segments that are like construction and other things that are smaller. It is mainly the rail cars. That's their big business. But they're pretty well diversified into these different areas. They're a little different than some of the other rail car makers. But, they just reported and saw revenue up 7%. Again, the backlog grew. They also raised guidance by 30 cents, which is more than they beat by. And so now they expect between $4.20 and I think it was $4.40 this year. The analysts, you can see I put up the estimates here, all had a raise to get in line with, this big boost in the guidance. So they're sticking right at the middle point here at 430. But, it's big earnings growth, it's double-digit earnings growth. And then you can see the chart. I put up the 2-year because for a little while there, the investors were thinking what all the analysts have been saying, oh, this story's over now, it can't keep going. And so the stock sold off. And then it's been rebounding on these good quarters, and this positive earnings guidance is back up to near 2-year highs here. Still pretty cheap, around 10, 11 times. And they just raised the dividend 15%. So the yield is about 1.3%. But, the story still looks good. I don't know. It's a good indicator for the economy that people are still ordering and leasing rail cars and barges.
All right. Then it's a much different picture for Alliant Techsystems, who's transitioning out of one business and into another, right?
Yeah.
They're going from aerospace to sport products?
Yeah. This company is listed in the aerospace industry. So when you look at it, you're thinking that, they do all this stuff for the Defense Department, and they do. They've made rocket systems for NASA. They are a huge ammunition provider. They're, I think, the #1 for the DoD. They also sell to regular consumers the ammunition, and that segment has been really hot. If you look at their quarterly earnings, you'll see that it was the ammunition group that is really seeing the earnings growth, not obviously the rocket systems and the other stuff they were doing for the Defense Department, because the wars are winding down and the sequestration and all this other stuff. So this company has made a real determination that they're going to basically change their business model and expand that sporting goods segment of the business into the dominant segment of the business, because they're, I believe, thinking that the defense side is not going to go up anytime soon. So you might as well get in the area that's hotter. So on September 5th, they announced that they're going to buy Bushnell Group Holdings. They make a lot of optic where they make scopes for firearms, night vision goggles, things like that. It's about $1 billion deal, so they're not that small of a company. And that's really going to expand their sporting goods side, which is where their ammunition is. They recently also acquired a firearms maker, so they're really working on building that aspect. The analysts think after this deal closes, which should be in the next 6 months or so, that the sporting goods will be about 45% of the total revenue. So they're almost halfway there, and then in the next year or two that it will become the dominant segment of the entire company.
So we're talking specifically outdoor sports.
Yeah, like the hunting and all of that. Right. Like you can buy Bushnell goods at Cabela's, at Walmart. You can go and buy the night vision stuff and all of that. So, they're kind of transforming themselves more into a consumer goods company, and that will put them, they're not going to actually sell it like a Cabela's, but it's putting them in kind of that hunter category, sports category. So
they're not going to be selling tennis rackets or skiing poles or anything like that.
None of that stuff.
Okay.
But
I just wanted to clarify that.
Yeah, I mean, like I said, the ammunition has been hot, but that's declining on the DoD side, and soon enough it will decline on the consumer side. It's at record highs. It's not expected to stay there forever. So they needed to do this to boost earnings growth. They did say that the acquisition would be dilutive this year, but accretive in fiscal 2015. They're already in fiscal 2014. But you can see the earnings estimates. I put them up here. The analysts are still pretty bullish. You're not seeing them go down for 2014, even though this acquisition is going to be dilutive to it because of transaction costs.
Yeah.
But the analysts all like this direction that they're going in and think that management can successfully navigate basically transforming the company into this other entity. We'll see, because you've got a year or two to figure it out. But investors really like the change. The stock was kind of dragging along with all the other defense sector stocks because the cuts were looming. But this year, stock has soared. It's kind of stalling out here as I think a wait-and-see approach is taken by consumers, but it's trading around 11 times. So it's pretty cheap compared to the overall market, and cheap compared to not its competitors, but the area it's going into, like the Cabela's of the world. So it's an interesting story.
Yeah, it is interesting. Something you don't see every day.
No.
A company going from one type of business to a totally different type of
No,
business.
it's going to take good management to get them there, but they seem to be making the correct acquisitions in order to do so. So
Yeah, do you own either one of these?
I do not, but the value investor does own the Alliant.
Okay. Well, if you have a yen for more stock picks and you're not at our website, Zacks.com, watching this video, then get on over there, because that's where you'll find more stock picks and stock picking strategies. And the stock picks change daily many times, so check back very often. With Tracey, I'm Terry Ruffalo.